Okay, great. Can I get a quick audio check here, audio and video check? Can everybody see the screen and hear me clearly? Type in Y, type in yes if you can in fact hear me. I will make sure everybody can hear me before we get started here. Okay, great. Thank you, Saul. I appreciate that. Thank you, Jeremy, Alex. Great. I appreciate everybody responding here. So let's go ahead. Let's get started. My name is William Gallagher. I'm with the Market Traders Institute. I am excited and honored to be here with each and every one of you here today because I'm going to be going over my step-by-step plan on how to trade the Forex market. I'll walk you through the process over the next 45 minutes from the basics all the way through some trading strategies. I actually have a trade that I'm looking to place right now. I'll walk you through the methodology of how to find it and how I found it and what I'm going to be looking to move forward here in the future. But before we begin, what I want to do is I want to let everybody know that you shouldn't invest money that you can't afford to lose. You should always keep proper equity management in mind with your trading. Now, I am going to be walking you through some trading strategies here today. I'm going to bring you to the live market, show you a trade that I'm actually looking to place right now. But when it actually comes time for you to place a trade, that decision to make that specific trade is yours and yours alone. I'm not here to actually give you financial advice. I am actually here to help you become educated on how to trade the market. So we do encourage you to go through the entire education and become an educated trader before and all knowledgeable before you actually start trading this here. So just to set some agenda here, what I'll be going over, I'll be going over the basics of the Forex market, get you up to speed before we actually pull up our charts. When I pull up my charts, I'm going to do some analysis here, show you our form, show you some of the automated tools that are involved with our charting platform. I'm going to walk you through a trade that I just recently took a couple days ago, show you how I placed the trade using our charting platform. Plus, I'll show you here how to actually go ahead and what I'm looking for is first place in this trade right now. Now, I'm also going to walk you through another trading strategy. I'm going to show you the London daybreak trading strategy here today. I'll give you the basics on how that works. But I'm also going to show you how you can get trained by the gentleman that actually created that trading strategy. I'll show you how to set up a demo trading account. Plus, I'll show you how you can take our charting software here for a free trial, or for a trial here, plus some free bonuses here. So I kind of give this my Forex starter kit here, take you from the basics all the way through on how to actually get started trading literally today on the Forex market. Now, just as Renee had mentioned, my name is William Gallagher. I'm with the Market Traders Institute. A little bit about my background before we get started. I've traded in the investment market since 1998. I've also worked for several different financial companies and firms, and I also did help start, launch, and build an entirely new financial services company from the ground floor up. Now, I am a full-time active trader, and I also am a student of Market Traders Institute. So everything I'm showing you here today about the Forex market, I actually have learned from Market Traders Institute. Now, I think some of you, if you've been through us with Investor Inspiration throughout the whole day, you may have seen one of my colleagues, Joe Cavallaro. He started off this Investor Inspiration here today. He's also from Market Traders Institute. But for those of you who may have missed it, I'm actually coming to you live here from the Market Traders Institute in Orlando, Florida. This building you see on your screen, this is actually our building. It is a 70,000 square foot trading and training facility. The neat thing about our buildings, you actually come get trained live in person. We're located just north of Walt Disney World, the amusement parks. A lot of our students will come here, make a vacation here, and they'll actually get trained live in person in our classrooms here. A little bit about us here. We are getting a little bit of notoriety here. One of the things we are getting some notoriety about, Inc. magazine. Some of you may have heard of this or you may have seen this, but we were actually last year on the 2015 Inc. 5000 list of fastest growing companies. We were ranked 1,180. I just got this letter a couple weeks ago for 2016, actually ranked 592. So we moved up quite a bit on that one here. As you can see in the letter here, we're mentioning the same breadth as Intuit, Zappos, Under Armour, Microsoft, just naming a few companies that are on this list along with us as well. Now, before we jump in, not only does Market Traders Institute have some of the best training and trading facilities and the best education, we also have some of the best traders here, some of the best analysts. One of the ones I want to mention before we get started, his name is Joshua Martinez. Those of you that have not heard of him before, a little bit about him, he is one of our product experts. He has trained thousands of Forex investors. He actually did take an initial deposit of $500, end up generating over $39,000 of profit from it here. He's a published author, international speaker, pro analyst, and a full-time trader. Now, the reason I'm talking about Josh is because he's the gentleman that created the London daybreak trading strategy that I'm going to be sharing with you here today. Now, some of you might be wondering, well, what about some third-party verification here? This is his trading account here for 2016 so far. He's up about 22,000, almost 23,000 pips so far, up about 26% in his trading account. And some of the strategies I'm showing you here today, these have helped him get to this point here. So before we get started, what I want to do is just want to set that basis here before we jump in. I know a lot of you are brand new to the Forex market, so what I'd like to do is before we get started, don't want to spend a lot of time if most of you already know what the Forex market is. Everybody just quickly look at the screen right now and follow the instructions. If you are brand new to the Forex market, please type the number 1 into the chat box. That's going to let me know you're brand new, you have no experience whatsoever. Please type the number 2 in if maybe you have a little bit of experience in the Forex market. Maybe you've been trading a demo account, maybe you've heard about the Forex market before, have a little bit of experience with it. Type in the number 3 if you are an experienced Forex trader here. So, okay, yeah, great. Just as I expected here, looks like, yeah, a lot of you are number 1s here. Yeah, I got a couple number 2s here. I have fees. Hope I'm pronouncing that right. It's a number 2. I got Alex says he's a number 3. Okay, so I do have a couple that are experienced Forex traders as well. Joanne's a number 1. Labuse. Okay, so yeah, most of you looks like you are brand new. So let's go ahead before we jump into this. Let me just quickly walk you through the basics of the Forex market before we jump in. I pull up the charts here, show you some trading strategies on how to do this here. For those of you that are brand new to the Forex market, what it is, hold on one second, let me move forward here. The Forex market is the largest financial market with almost limitless amounts of liquidity. It's a very large market. There's over $5 trillion that is daily traded in this market. So what that means, there's a ton of potential in this market just to get a fraction of that. I know anything about the Forex market, it's a very flexible market. There's 3 major trading sessions that go on daily in this market. You have the Asian trading session, you have the London trading session, and you have the New York trading session. The reason I'll point that out is because the London daybreak trading strategy is going to take advantages of the overlaps on these trading sessions here. So what that means is because these sessions overlap, the neat thing about this is that you can literally trade this market 24 hours a day, 5 days a week. It's open from 5 o'clock p.m. on Sunday through 5 o'clock p.m. on Friday. One of the things I also want to point out, let's talk about what we do in the Forex market. What we're trying to do is we're trading one country's currency against another in an attempt to figure out which one's going to gain in value against the other. So the chart I'm showing you right here, you can see in the upper left-hand corner, this is the Great British Pound, GBP, US dollar currency pair here. So in essence, what we're looking at here, as the market's going up, the Great British Pound is gaining in value versus the US dollar, and when the market goes down, the US dollar is gaining in value versus the British Pound. Now, these little rectangles you see on your screen, we teach our students how to trade utilizing what are called Japanese candlesticks. For those of you not familiar, maybe you heard of it before, this is what's called a candlestick chart. Basically, what these candlesticks, they represent what the market has done in whatever time frame you select on your chart. So if you go back up to the upper left-hand corner of my screen up here, you can see that this is a 1-hour chart. So each one of these candlesticks, it represents what the market has done in 1 hour of time frame. Now, I'm not going to go into a lot of details explaining these candlesticks here, but all you really need to know, for those of you who are brand new, is that the white candlesticks mean that the market has gone up during that hour. Dark blue means that it has gone down. So the white candlesticks are bullish candlesticks. Dark blue are bearish candlesticks. They're very simple here. Now, the neat thing about these candlesticks is something we teach our students here, is that these candlesticks, they're going to form what are called candlestick formations. These candlestick formations, they're considered the sign language of the market. They tell the trader a story, help us to determine which way the market's going. Bottom left-hand corner of my screen, what I've circled right here, this is what's called a Morningstar candlestick formation. Sign language of the market, telling the trader, saying, hey, look for this market to U-turn and go upward in a bullish movement. Candlestick formation at the top here is called an Evening Star candlestick formation. What this is telling the trader is to look for the market to U-turn and go downward in a bearish movement. Now, if you go through a full education, we teach you in detail how to identify these candlestick formations. However, with our charting software here, I'm going to show you the charting software is actually going to help identify them for you, kind of show you how that works. I'm actually going to pull my charts up here in just a second and show you how that actually works here. One thing before we jump in here, the only thing about the Forex market is that it allows you to focus. Unlike the stock market. In the stock market, there's over 40,000 different stocks that you can watch and trade. Here in the Forex market, there's only about 60 currency pairs to trade. The neat thing about this is that we narrow it down for you. In fact, I only look at about 18 different currency pairs each day that I'm trading. And with the trading strategy I'm going to show you here today, the London daybreak trading strategy, I'm going to narrow it down and I'm going to show you 6 currency pairs to watch and trade here today to help get you started very easily and focused here today. Now, one more thing we need to know before we jump in and start actually trading in this market. What we're trying to do is capture what are called pips. Now, PIP, PIP, it is an acronym. It stands for price interest point. Now, very simply, what it represents, very basically here, most of you probably already know that there are 100 pennies in a US dollar. So basically a penny, it represents 1/100th of a US dollar. If we were looking for a unit of measure that's smaller than a penny, it's the equivalent of what is called a pip. Now, just as a penny, it represents 1/100th of a dollar, a pip, it represents 1/100th of a penny. So just as there are 100 pennies in a dollar, there are 100 pips in a penny. The pips are represented by these last 2 decimal points here. So the first 2 decimal points are your pennies. Second 2 decimal points beyond that are your pips. So very basic, very simple here. If you're taking notes, that's all you really need to know as far as what a pip is. Now, what I want to do is before we jump in here, let's break this down to the very basics here. I'm going to walk you through a very basic Forex transaction because I'm willing to bet that a lot of you probably have already did a currency exchange. You probably already have done this. You've probably been to one of these kiosks here if you've gone out of the country. Now, let's just say here that we're in the United States. Let's say that we're going to be going to Canada. And let's say before we go to Canada, we want to exchange our US dollars for Canadian dollars. And let's say the exchange rate for the US dollar Canadian dollar is 1.32. So what that means is that our 1 US dollar is going to be worth 1.32 Canadian dollars. So in the morning, maybe we go to the currency exchange and we exchange 1,000 US dollars, we are going to be getting back $1,320. So very basic. We just very basically just created, just did your first currency exchange here, your first currency transaction. We just exchanged our US dollars for Canadian dollars. Now, let's just say at the end of the day, let's say that we're coming back from Canada, and as we're coming back in the United States, we see that the US dollar Canadian dollar exchange rate is in the morning it was 1.32. In the evening, let's say that it went up 1 penny. Let's say the exchange rate is now 1.33. So what that means is that our 1,000 US dollars are now going to be worth 1,330 Canadian dollars. So very basically here, we would then get back, when we exchange our Canadian dollars back, we would get back $1,110. So we just made $10 profit off of that with that 1 penny movement right there. Now, the neat thing about this is in the Forex market, like I said, 1 penny in the Forex market, it equals 100 pips. So how much would those 100 pips be worth in the Forex market? Let me show you here. In the Forex market, we utilize what's called leverage here. We utilize leverage in this market that's going to be provided by your broker. It's going to allow you to place the trade and to generate the pips and generate a leverage return on the pips here. We trade in lots in the Forex market. There's 3 basic lot sizes. You have what's called a micro lot. Now, a micro lot, it's about a $20 investment from your trading account. Your broker is going to borrow this investment size, allow you to place the trade and to generate the pips. Now, in this case here with a micro lot, if you're trading with a micro lot trade, each pip is worth 10 cents. So those 100 pips, they'd be worth about $10 if you're trading a micro lot. Now, we refer to a micro lot basically as crawling. You're start off when you get into the markets, you're not simply just going to jump in and start running, you start off crawling in the market. And then once you get to a point where you're comfortable trading with a micro lot, you'll advance up to a mini lot account. Now, a mini lot account, it's about a $200 investment from your trading account. With a mini lot trade, it's worth about, each pip is worth $1. So in this case, those 100 pips, they'd be worth $100. So you've gone from crawling to walking. Now, what we really want you to do is get to the point where you're running in this market here. What you're trading is what's called a standard lot. A standard lot is the standard by which most traders strive to achieve in this market. A standard lot, it's about a $2,000 investment from your trading account. Each pip is now going to be worth $10. So those 100 pips, they would be worth $1,000 if you're trading a standard lot. Now, I'm actually going to take this one step further here today. I'm going to show you how you can set up a demo trading account where you can actually utilize play money, get to that point where you're comfortable trading the play money, then we actually invest in your account. You can start off with a micro lot, then you get to the point where you're trading with a mini lot and then a standard lot. But for those of you that are taking notes, just go ahead and write that down. I'm going to allude to this here in just a second here, but let's go ahead, let's go into the charts right now. I'm about to teach you in just a second what's called the London daybreak trading strategy. The London daybreak trading strategy, it's a very simple trading strategy. I'm going to show you the basics here. When you take our trial you take the charting software for a trial, you'll actually get a video where Josh actually fine tunes this a little bit for you here, goes in a little more detail to what I'm going to be going in here today. I have about 45 minutes to go through this here today. Now the London daybreak trading strategy, it's going to utilize these 6 currency pairs here. Now I'm going to come back to this here in just a second because what I'm going to do is I'm going to jump into the charts. Like I said, I have one trade set up that I'm looking at taking right now. So let's go ahead, let's jump in the charts. I'll show you some basic analysis on the charts right now, how we can use our charting software. I'll show you how I actually found a trade here a couple days ago, a very nice trade. Captured 100 pips off of it, but I'm also looking at another trade right now where I'm going after a lot more than that. So you should see on your screen right now 2 different charts. You have on the left-hand side, you have the Great British Pound US dollar. This is on a daily time frame. So that means that each one of these candlesticks, it represents what the market has done in 1 day of trading. On the right-hand side, you have the Great British Pound US dollar on the 1-hour chart. So that means each one of these represents 1 hour trading here. So the neat thing about this market is that what you're going to start off doing is you're going to answer 3 questions to get started here. Number 1, you need to determine which direction the market's going. Number 2, you need to figure out where to get into the market, and you also need to figure out where you're going to get out here. So let's go ahead and here, let's start off here with the daily chart. You're going to start off with a large chart, either a monthly, a weekly, or in this case here, a daily chart. Let's go ahead, let's pull this up here. And I'm going to back this up. We'll bring it to the market here. I'm going to show you why I was looking at taking this one trade, but I'm also going to show you the trade that I'm kind of looking at right now. So let's just go ahead, let's back this up here. I'll show you how to do some basic analysis on these charts, and I'll actually show you here how to actually got to that point where I'm trading this. So let's back this up here just a little bit. Right back here. There we go. Oh, we'll back it up just a little bit further. There we go. Now, as I mentioned, if you're taking notes, I'm going to teach you some basics here. Number 1, 3 questions you need to answer. Number 1, where is the market going? We're going to help to determine trend direction here with some simple trading strategies. I'm going to utilize what are called trend lines, and I'm going to utilize what's called support and resistance here. Number 2, we need to determine where and why to get in. And number 3, where and why to get out. Very simply here. Now, as you can see here, what I've done, I've drawn these lines here. Now, these lines are called trend lines. Very simply, above this trend line, you're in what's called the buy zone. We're going to be looking to take buying positions as the market's going up. When the market comes below that trend line, you're in the sell zone. You're looking to sell positions as it's going to down. Now, when the market goes back up again, we're in buying positions here. Now, we teach you, as part of our education, we'll teach and show you. In fact, let me delete these here. We'll teach and show you how to draw these trend lines. In fact, our charting software is very easy to use. You'll get to take this for a trial here today. But very simply, draw your trend line just like that. Above, you're in the buy zone, and when it's coming back down, you're in the sell zone. Now, for those of you that might not quite understand if you're drawing these correctly, as part of our charting platform, we have some auto tools here. So we actually have what's called our Smart Trendline tool that all you need to do is determine the new high point on that trend, come up here, and it's going to draw your trend line for you automatically here. So we're in the sell zone here. Now the market reverses, comes back up. So as the market's going up, we're in the buy zone here. Now you simply just are not going to simply just jump into the market right here. Let's go ahead, let's zoom in. Let me delete all this. And we'll delete this. And we'll delete that as well. Now, in this market, what we're going to be looking for as the market's going up, this is something you'll learn when you go through a full education, the market's going to be making higher highs and higher lows. It's going to be moving in these wave movements here. When the market's going down, we're going to be looking for the same thing, these wave movements as the market's going down. Now, what we have found is the market tends to move in what's called an A, B, B, C, I'm getting ahead of myself here, C and D pattern. And then that pattern repeats, A, B, C, D, A, B, C, D as the market's going up. And then as the market's going down, it's going to do the same thing, A, B, C, D as it's going down. Now, we have a tool that takes advantage of these wave movements that I'm going to show you right now. I don't know if I think Joe may have showed you this before. It's called the Fibonacci tool. I'm not going to go into a lot of detail explaining what Fibonacci's do, but basically the Fibonacci's are going to help us predict where the market's going based on where it's been. So what I'm going to do is I'm going to back this up here just a little bit here. And when we find this A to B boundary here, I'm going to show you here in just a second how we can find this A to B boundary. What we can do is we can come in here, we can spread our Fibonacci tool from the A to the B just like that. Now, in between this A and B boundary, we have found that there's a high probability of a pullback, or what we refer to as what's called a retracement. These lines in between the A and B boundary, these are called retracement lines. Now, to make this very simple to understand, we color coordinate these retracement lines to the lines above the B level. What we have found is the market in between this A and B boundary, it's going to retrace, U-turn, and then extend. I'm going to go into detail explaining how this works here, but based on where the market pulls back and forms this U-turn, we're going to be looking to find our extension on where to get out based on color. So if the market pulls back and forms its C point right here, forms its U-turn, right here at one of these red retracement levels, we would then be looking, if we buy into the market after that U-turn, we'd be looking to exit our position at the red extension. Once again, these are hidden levels of support, hidden levels of resistance. So looking for an A, B, C, D pattern just like that. Now if the market pulls back to my blue retracement level and forms that U-turn, I'm going to show you here in just a second how we can find the U-turn. If we buy into the market, we'd be looking for a D point to exit at the blue, A, B, C, D, just like that. Now, if the market pulls back to the green, very simply, if we buy into the market after it U-turns at the green, we'd be looking to exit at the green extension, A, B, C, D, just like that. And the same thing happens when the market's going down. We'll be looking for that same A, B, C, D movement as it's going down. The same thing happens here as it fulfills these A, B, C, Ds. We simply would keep drawing our Fibonacci's just like that here. So what I'm going to do is let's come in here. Let me delete all this here. I'm actually show you how this actually applies in the market. Then I'm going to show you how our software does this all automatic. Oops. There we go. That's another neat thing about our charting platform, my friends, that if you mess up, you can simply come in here and you can hit undo just like that here. So we determine, let me see if I can quickly delete some of these here. There we go. Now, the market, oops. Let me see if I can delete all that. There we go. I'll just delete all. There we go. Now, this is now the lowest point of that new trend here. If you remember, the market pullback formed its U-turn right here. So here's what we're going to be looking for. We'll be looking for the new ABCD. Let me back this up here just a little bit. Looking for the ABCD patterns as it's going up here. Now, we can either simply come in here and draw our Fibonacci's, just like this, A, B, C, D, A, B, C, D, just like that, or actually, hold on a second. So here's another thing about our software here. There's actually, let me zoom in here. I'm going to show you here the auto tool that's going to do this automatically here. Now, here's very simply here to show you how we can find the A to B boundary. Let me move this over here. Why is this our A to B boundary? This point right here, this low point that has two candles to the left to the right, which are higher, that's my A point, that little candlestick wick right there. So there's my A. The market rallies up to this high point right there. That's my B. It has two candles to the left, two to the right. Now, I'm not going to go into a lot of detail explaining that, but when you go through our full education, we'll teach you that here. So in this case right here, there's our A to B boundary. The market pulls back right here to our red retracement level and forms this candlestick formation right here. And this is looks like it could be a Morningstar candlestick formation, engulfing bullish candlestick. Really, the charting platform here didn't really give me any indicator. What I mean by that is what happens if the market pulled back to a red retracement level. So I'd then be looking to exit my position right here at the red extension. So if I bought into the market right here, if I bought in right here, I'd be looking to exit at that green or at the red extension, like a buddy system, red to red. Now, here's what happened here. The market went up, came back, pulled back again. So if you miss this opportunity right here, the market gave us this one right here, this green candlestick. And this is actually done right in the charting platform here. The charting platform, you can come in here and turn on all your candlestick formations here, just like this here. So if you want to, you simply come in here, hit select all. And I love using these here. I'm actually going to show you how I apply this in the actual charts here. But in this case, there'll be another opportunity to buy into the market right here. And of course, the market does in fact come up and hits that that red extension right there. So even if we did buy into the market right here at the close of this engulfing bullish candlestick, that was a nice 208 pip move right there. The market moved 208 pips till it hit that thing, to hit our extension. And then what happens that this ends up repeating here? We would then find our new A to B boundary here. Here's our new A, there's our new B, and then the market repeats itself. A, B, C, D, just like that. Now I'm going to show you something very simple here, my friends. Let's go ahead, without going into a lot of, oops, let me back that up. Let me delete that. As I told you, we have tools that do this all automatically here. So instead of having to run our Fibonacci's the whole way up, A, B, C, D, A, B, C, D, A, B, C, D, as it's going up, all we have to do is come in here. We have what's called our Smart Fibonacci tool. It's our Auto Fibonacci tool. We can come in here, click that, come here to the beginning of the new trend, and it's going to draw our Fibonacci's automatically for us the whole way up. So we had 1 ABCD, 2 ABCD, 3 ABCD, 4 ABCD, and then as the market's going up, we had the new A, B here. Now, one of the things we're going to teach you when you go through our full education is that we tend to look for the market to pull back to at least this first red level here, the 0.382 retracement level. So what happens up here is that the market pulls back right there. Doesn't really give us any indication of getting in. It breaks through that trend line right here. So when the market breaks through my trend line, that blue trend line right there, I'm now looking to take selling positions. We would then reverse our position. So very simply, let me delete all this. Now I apologize for kind of glossing over a lot of this here, just kind of giving you an overview to bring this quickly to the live market, where we are. And when the market starts going down, we come up here to the beginning of that new trend, and we draw smart Fibonacci's as the market's going down, just like that. So we have these A, B, C, D swings as the market's coming down to where we are in the current live market. Now, just to very simply set up and show you here where we are in the current live market, here's our, just to compress this a little bit here, we have these A, B, C, D swings until we get to right here. Here's our current A, B, C, D swing. Now this is on the daily time frame. Most of you, if not all of you, are probably not going to trade on the daily time frame. We're simply going to use this to help us determine direction in the market. Now very simply here, here's our current A to B boundary on the daily time frame. As I told you, we're looking for the market to pull back to at least this 0.382, that first red retracement level. So here's what's happened here. Going back since the end of June, the market's been waving. In fact, I'll draw this out for everybody here. Let me show you what's been happening here. It's basically been waving, comes down a little bit here, comes back up, touches that point, comes down, comes up, and then has at this point come back down to this level. This is what we call channeling. The market has been channeling in between these two levels. Now this level up here, once again, without trying to go into too many details here, this is called a level of resistance, and this is called a level of support. Now we haven't gotten that red retracement pullback yet. So ultimately we're looking for the market to at least pull back to this 0.382 level here. Now a couple days ago, going back to the right around here, I was looking for the market to come down here to this level. So I was looking for the market to go downward in a bearish movement as the market was coming down. So what I did, simply instead of trading on the daily chart here, what I did was I transferred this information here onto a smaller time frame. So you can trade on a 2-hour time frame, a 1-hour time frame, a 15-minute time frame, whatever you feel comfortable with. I actually traded this on a 1-hour time frame here. So very simply, I was looking for the market to come down to this level right here. Now here's the neat thing about this. To kind of go over some more details here about our charting platform. If you want to, I can simply click on this and hit link object, and I can actually link this level of support onto my lower time frame. So if you see what I did right here, I linked it onto my 1-hour time frame. So right here is where I was looking to get into the trade. I'll actually pull this up here in just a second, but at this point I was looking for the market to at least come down and hit this purple level right here. So let's go over here now to the 1-hour time frame. And let me show you how I actually set up the trade. I'm going to show you here where I'm looking to get into the market once again. On the 1-hour time frame, we simply would come in here, come up here to the beginning of our new trend, our downward trend. We can hit our smart Fibonacci's just like this, and it runs it down. So this is now our current on the 1-hour time frame on the pound US dollar. We have an A to B boundary. Let me zoom in. Once again, you'll learn this when you go through education. We look for the market to pull back and retrace to at least this 0.382 level. So here's what happened here. The market came down here and U-turned. Now, another thing we're going to teach you about are what are called stochastics. These little lines down here. Some of you have been asking about these little here. Above this red line right here is the overbought zone, meaning that when the market's up here, we're looking for the market to go down. When the market's down here, it's in the oversold zone. We're going to be looking for the market to go up. So what we had here at our B level, nice little green candlestick letting us know to look for the market to U-turn. We were in the oversold zone here, so we were looking for the market to go up. The market came up right here. Didn't quite hit our 382, but we were in the overbought zone. And we had a nice little red engulfing bearish candlestick. Now, that's the thing about our charting platform is you can come in here and turn all these on. I love using this here. It's greatly helped me out in identifying these here, but we'll teach you how to identify these candlestick formations as well. So we come in here and just like that, so we had our AB. Now, it didn't hit our 382, but it did come down nicely. Came down here and started hitting a level of support until right here. Right here it formed, gave me a nice little green candlestick. And we weren't quite in the buy zone at this point. It came down here and dipped a little bit here. So it wouldn't have necessarily been a buying opportunity, but the market U-turn came up to this point right here. Now at this point right here, we hit that 0.382. So I'm going to zoom in here and show you the trade I just took here a couple days ago. Once it hit this 382, I was now looking for the market to U-turn. I was looking for it to U-turn and start now going downward to go to its extension level. What happened is I drew this line right here. This line's called a counter trend line. When the market came up, it broke my counter trend line, gave me my red candle, letting me know to look for the market to go down. So I then went ahead and I sold the market right here. I went ahead, shorted the market right here at this candlestick. And we were still in the little bit in the sell zone. If you look at our stochastics. So it was looking like a pretty good trade for me, so I went ahead and took it. The market came down, went up a little bit, gave me another red candlestick, and it dropped. Now, going back to our Fibonacci's, this is something some of you might be wondering here. We had a red retracement pullback. So ultimately, we'd be looking for it to come down here to the red extension here. Remember, red goes to red. However, I had drew this line right here per my larger time frame. So I was looking for the market to probably come down and hit that. And just like a clockwork, it came down, hit this line. I got out of my trade right about here, right as it came and rebounded off of this line right here. That was a nice little 100 and so pip trade I took advantage of as it was coming down just like that. Now, here's where we're going at right now. If we go back to that daily time frame, the market now has come down and it's bouncing off that level. So what I'm looking for now is I'm now going to be looking for this market. If it follows what's been doing, it's going to come off this level of support. I'm now looking for it to come back up. There's a possibility it could come back up to this purple level, but to trade this safely, what we do is we come back in here and we can come in here on the daily time, I'm sorry, in the 1 hour time frame, and if we want to, we can draw our Fibonacci's going back up again, just like this here. So we have an A, B, the market pulls back, so we have a couple different entries right here, but ultimately what I'm looking for the safe trade, I'm looking for it to break our trend line when it goes above here, and I'll be looking for it to take this up just like that. So for those of you looking for a trade opportunity, what I'm going to be looking for is probably for this to come up, break the trend line. I'm going to be looking for it. It'll come up here and hit our red extension. Remember, red goes to red. And when it does, I'll be looking for my new Fibonacci's, A to B, just like that. I'll be looking for the market to come up. And I'll be looking for something like this to happen. A, B, pull back to a red retracement level, and then come up. So I'll be looking probably to get in, and once it breaks our trend line somewhere right around here. So that's going to be my safe trade. That would be worth probably about 90 pips. Ultimately, if we go back to that daily time frame, if it does in fact come back up the whole way, oops, if it comes back up the whole way on our daily time frame, that's about 400 and almost 500 pips of bullish movement here. But I'm simply going to trade it using my Fibonacci's as it's going up just like that here. So what I just showed you right here, these are some of the features built into our charting platform, showing you here where to get in, where to get out. with some basic analysis. Now, when you go through a full education, we go into a lot more detail teaching you and showing you how to do this. I just want to come in here and show you a recent trade. I'll show you a trade I'm looking at here. Another neat thing about this, some of the other neat features about our charting platform. So you've been asking about these rectangles at the top here. The neat thing about our charting platform is that you can actually create what are called workspaces. I have a workspace here for the pound US dollar that I'm showing you here. I'm actually going to pull up the workspace here in just a second for the London daybreak trading strategy here. The other neat thing about these workspaces, you can save them to your computer, and they are cloud-based. You can save them either to your computer or to the cloud, and you can actually set our trading software up on another computer. So if you want to set this up on your laptop or a different computer, you can literally open up these workspaces on a different computer here. The other neat thing about our charting platform, if I wanted to place a trade right now, let's just say that a trade opportunity presented itself right here, I can come in here and you can actually trade live right from the charts. So if I want to come in here and buy into the market, I can come in here, let's see, this is actually if we simply right click, let me delete this here. And we'll teach you and show you how to do this. There's videos and tutorials I'll get you access to today to show you how to do this. But if we simply come in here and we hit buy, let's say we just wanted to buy here, and all your information is right here. We can set our stops and limits. Everything is set up right there, right from the charting platform here. So I wanted to go ahead and show you that here, and you'll be getting a couple free workspaces here as part of this here. You'll get the London daybreak trading strategy. Josh is actually going to provide you with a couple of those right here. But what I'm going to do right now is let's go ahead. I've shown you a little bit of basic analysis using our charts. Let's go ahead. Let's start talking about the London daybreak trading strategy. This is a very simple trading strategy that's going to answer each one of these questions very quickly to help you get in and out of this market very quickly. So I'll give you the basics of this, and then you'll actually go through a video. In fact, let me pull that up here and show you. There's actually going to be an onboarding series here. There'll actually be a video here where Joshua, he'll go in, he'll fine tune this for you here. So let's go and let's start talking about the basics here of the London daybreak. If you want to go ahead and jot this down, these are the 6 currency pairs we're going to be using for the London daybreak trading strategy. It's going to be the Great British Pound Canadian dollar, Great British Pound US dollar, Great British Pound Japanese yen, Great British Pound Swiss franc, Great British Pound New Zealand dollar, and the Great British Pound Australian dollar. Now, Josh's strategy is going to show you how to go after 30 to 50 pips on the low side minimum each day. I'm going to show you a trading strategy here where we're going to go after first base as 50 pips. Our minimum is going to be 50 pips per currency pair per day to get on this here. So let's go ahead, let's jump into this now. Let me quickly show you this trading strategy here. And you should see on your screen right now, these are the 6 currency pairs for the London daybreak trading strategy. They're all Great British Pound currency pairs, as some of you may have already recognized. And if you look on our charts, you'll recognize this is on a 1-hour time frame. So if you're taking notes, it's on these 6 Great British Pound currency pairs, and it's going to be on a 1-hour time frame. Once again, on the Pound Aussie, the Pound Canadian dollar, the Pound Kiwi, the Pound US dollar, Pound Swiss franc, and the Pound Japanese yen. So what I'm going to do is I'm actually going to demonstrate this here on the Pound yen. Let's go ahead, let's pull this up here. And to back this up before we jump in, let me show you the basis here of why we're looking at taking this trading strategy. Yeah, those of you wondering here, this is called the London daybreak strategy. And I'm going to show you the basics of it. Josh, in that video that you'll get as part of the trial here today, he'll go in a little more detail, fine-tuning this for you here, but I'll actually show you the basics. For those of you taking notes, let me go ahead and demonstrate and explain to you what we're looking for here. Now, what we'll be looking for is we'll be looking for in between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time. We're going to be looking for the market to form its initial high or low for the day. So what we're going to be looking for is the market between 2 a.m. and 5 a.m. Eastern Time for it to pull back and form its low and rally up, or it's going to rally up, form its high, and pull back between 2 a.m. and 5 a.m. Now, the reason we're looking for this is, if you remember, I told you at the beginning of the webinar, there are 3 major trading sessions. You have the Asian trading session, you have the London session, and you have the New York session. So what you have going on right here between 2 a.m. and 5 a.m., you have the close of the Asian session, and you have the opening of the London session here. Now, so what we're going to be looking for is directional movement coming off of the overlap here. So what we're looking for is the market pull back, form its high or low, and then either rally in one direction or the other. And then what we're going to be looking for at the opposite end between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. We're going to be looking for the market to form its opposite. We'll go low or high for the day. So we're going to be looking for directional movement coming off from between 2 o'clock and 5 a.m. I'm going to go into a little more detail, explain to you exactly how to do the strategy in just a second. But the reason we're looking for this directional movement is we've found that on these six currency pairs, they have what's called an average daily trading range, meaning that we're looking for each one of these currency pairs to move a minimum of 50 pips on the low end to over 200 pips. We're going to be looking for directional movement of a minimum of 50 pips or going over 200 pips. I'm going to go a little more detail, explain what that means here. Now, once again, those of you, to give you an idea of what that's going to be worth, we're going to do this on we're going after each one of these currency pairs doing this here. If you're trading a micro lot account, if you remember, each pip is worth 10 cents. That means you'd be generating about $5 per currency pair per day. That's not life-changing, I understand, but once again, we're going to teach you how to crawl, and then we'll get you to the point where you're walking. Trading a mini lot account. With a mini lot, each pip is worth about $1, so you'll be going after about $50 in profit per currency pair per day. And then the standard lot is $10 per pip, so you'll be going after $500 per currency pair per day, and just like that. Now, I'm going to show you here at the end of the webinar how you can set up a demo trading accounts where you can actually practice doing this utilizing fake play money here with through a broker here. If you stick with me, I'll actually show you how to do that here as well. So this is what we're looking to do here. Now, the reason we're looking for this directional movement is it's been found that during the European session, the banks are processing the largest bulk of the foreign transactions. And so what ends up happening is it provides a huge injection. There's this directional movement that comes off of it. So I'm going to go in now and show you the trading strategy to help us capitalize off of this directional movement, to get in and get out of this market here. So let's go ahead, let's bring this down. Let's bring this back down here to the market. And let's go ahead and show you here how this directional movement works here. So what I've done is I've gone ahead and outlaid this here. And what I've done is I've highlighted the 3 o'clock. What we're looking for is the close of the 3 o'clock a.m. Eastern Time candle. So essentially what you're going to be doing is you're going to be looking to start this strategy at 4 o'clock a.m. I'm going to go into that strategy here and explain this in more detail here in just a second here. So what I've done is I've gone ahead and highlighted each one of these 3 a.m. candles here. In the charting platform, you see I got them kind of circled here, showing you here. So if you can see here, this 3 a.m. candle, the market rallied up off of that one. 102 pips. This one came down about 56 pips here. This one right here came down 91 pips. This one here 95, and so on and so on here. This one was 164. This one was a nice little 72. This one was 82, and then this one right here was a nice little drop of 162 pips off of that, right around that 3 a.m. candle. Now, once again, Josh, in that video, I believe he explains why we're looking for the close of that 3 a.m. candle, why we're using this here, and we'll go into more details explaining that as well. So let's go ahead, let's zoom in right now. Let me show you the actual strategy of how to trade around it. Let's bring this here to, let's zoom in, right, oops. This candle right here. Now I'm going to go ahead and I'm going to highlight this one here. This is going back a couple days ago. We'll bring this to the live market. I'll show you these recent trades. This is the 3 a.m. candle on September 22nd. So it's going back, what, about 5 days. So let's go ahead. Let's zoom in. In fact, let me delete this. And once we determine we have the close of this 3 a.m. candle, let me show you what the process is going to be. We're going to come in at the close of that candle, and we're going to place 2 pending orders. We'll place 1 pending order 10 pips above the high. So we'll come in here. There's the high of that candle. So we'll come in here 1, 2, 3, 4, 5, right there. So this is going to be an entry buy. Place in your broker's platform, and it's going to be plus 10 pips above the high. Once again, it's just simply a pending order. We're not in the market until the market rallies up and triggers that. We also are going to have another pending order that's going to be 5 pips below this low. So we come in here, 1, 2, 3, 4, 5 right there. And that's going to be our entry sell. That's going to be minus 5 pips below the low. Right there. Yeah, actually, somebody just asked here about, yeah, these candlestick wicks, that's the high and that's the low. You'll be placing at 10 pips above, 5 pips below that here. Now, I'm showing you here, once again, this is just going to be the very simple basics of the London breakout. In the video that Josh is going to show you, he's going to show you how to fine tune this a little bit here to give you a little bit more probability here. But once again, if you remember, like I told you, to get into this market, we're looking for 3 things. One, where is the market going? Number 2, where and why to get in. And number 3, where and why to get out. And this trading strategy is going to show you each one of these very quickly here. Without having to know how to do Fibonacci's, without having to do all this here, it's going to very quickly show you how to do this. So we're going to be looking here to get into the market when the market triggers either our entry buy or entry sell. It's going to help us to determine which direction we believe the market's going here. So we have our 2 positions. They're pending orders. Let's see what's going to happen here. Now, 1 hour later, bam, the market rallies up. It triggers that entry buy. That entry buy just became a market buy, meaning that based off this simple trading strategy, we believe now the market's going to be going up. We're going to be looking for that directional movement for the market to go up. So very simple strategy here. It just triggered that market buy. We believe the market's going to be going up, so we'll be looking for that directional movement heading up in a bullish movement. Now, once one of these positions gets triggered, we're going to cancel the other ones. In this case, we're going to come in here, first order of business to come in here and cancel our entry sell because we believe the market's going to be going up in that bullish movement. Now, the next order of business is to come in here and set a floor up. We want to limit our risk on this trade. So what we're going to do is we're coming in here, we're going to set a stop loss. Now, it's going to be a little bit different here buying the market versus selling the market. When buying the market, we're going to set our stop loss right here at the low of that candle. I'll type that out. Stop loss when buying is going to be at the low. So we simply set our stop loss right there. Now our target is going to be 1 or 2 different things. Our target, which is also our limit, is going to be 1 or 2 different things. It's either number 1, it's either going to be a minimum of 50 pips. Because if you remember, we're looking for the market to go at least 50 pips in that directional movement, or a 1 to 1 risk ratio, meaning that depending on how many pips we're risking, that's how many we would be going after. And once again, I'm just going to show you the basic here, going after the 50 pips. In this case here, how many pips would we be risking on this one? We'd be risking about 46. So in this one right here, we're risking 46. That means we're going after 50 here. Once again, that's first base. So in this case, 50 is going to be right about there, 132.07. So that's our target right there. Oops. Let me measure that. Whoops, sorry about that. So what did I say? That's going to be 132.07. So I was off by 1 pip. There we go. So our risk on this one's going to be, our target's 50. We're risking 46. So we have our entry, we have our target, we have our stop loss set up. So let's go ahead and let's see what's going to happen here. So 1 hour goes by, 2 hours go by, 3 hours, 4, 5 hours later, the market does in fact go up, triggers our target here. We're out of that trade and we just captured 50 pips in about 5 hours. So we had 50 pips we captured on that one. And going back, once again, if you're trading with a mini lot account at $1 per pip, you just made about $50 in profit in about 5 hours. If you're trading a standard lot, there would have been about $500 in profit off of that right there. So very simply here. Now, I believe Josh in his video, he's going to teach you to show you how to actually go after more than 50 pips. I'm showing you how to go after first base. He'll probably show you how you can actually move your stop loss off either to break even or maybe a little bit below this and capture pips as you're going along here. But I just want to show you the basics here. You'll go into much detail here and he'll teach you some of the more advanced strategies of that this here. In fact, let's see what happens here. In fact, actually, yeah, in fact, it does go up. Went up just a little bit. a little bit more here, but oops, let's bring this now here to the next candle here. So there was our first trade right there, just like that. Now I have enough time here. I'm going to show you one more quick trade here. Let me delete that as well. So our first trade, not too bad. That was on the 22nd. Oops. This is on the 23rd. Once again, there's our 3 a.m. candle. Just like that. So let's zoom in here. And I'll go very slowly for this one. Once again, at the close of that 3 a.m. candle, we're going to come in here, set a pending order 10 pips above that high. So 31.54. This would be 31.64. And I'll type this out. But once again, in that video, Josh is going to go over in this. He'll be able to go over this in detail for you. It's going to be 10 pips above the high. There's our entry buy. And then we're going to set an entry sell. Once again, 5 pips below the low. And once again, this is just the basics in that video. He'll go into more detail about this for you. I promise he'll go into more detail, helping you to help understand this a little bit better here. So in this case here, 33. Set this at 28 right there. So that's going to be our entry sell. It's going to be minus 5 pips below the low. Nothing different than what we did on the previous trade. This can help us determine, help us to have that educated opinion as to which direction we believe that directional movement is going to be happening here. So let's see what happens. So 1 hour later, bam, the market does in fact trigger our entry sell. That entry sell now, this becomes a market sell, meaning that we're now in the market and we're shorting the market. We believe that the directional movement now is going to be going down. Very simple. That answers question number one. Number one, where do we think the market's going? This will give us the opinion that we believe it's going to be going down. First order of business when one of these orders gets triggered is to go in and cancel the opposite order. Just like that. Now, something a little bit different here. When you're selling the market, your stop loss is going to go 5 pips above the high of that 3 a.m. candle. So we'll come in here, 131.58 right there. And I'll type this out. Stop loss when selling the market is going to be plus 5 pips above the high. And once again, we're going after our targets, a minimum of 50 pips, but let's just go ahead and here, let's see what our risk is on this trade. On this trade, our risk is 28, so we're going to go after that minimum of 50 here. So let's go ahead, let's bring this down to right above. Let me move this down a little bit. So it's going to be right about there. So it's going to be 130.78. So right about there. And once again, I'll type this out for everybody. The target, which is our limit, which is setting your broker's platform. It's an automatic exit from this position when we trigger it. That's going to be, once again, either one, a minimum of plus 50 pips, or to a 1-to-1 risk. So just once again, we have our entry, stop loss is set. There's our target. Let's see what happens here. 1 hour, 2 hours later, the market does in fact, comes down here, triggers that. We just captured another 50 pips on that one. Not too bad. So 2 trades, we're up another 50 pips on this one. So once again, if you're trading a mini lot, that would have been, what, $50 profit in about, what, 3 hours? Standard lot, that would have been about $500 in profit in about 3 hours off of that here. So I specifically came in here to show you this, to show you here examples of the market going up and going down, but not too bad. 2 trades, we're up 100 pips off of that one. So let's go ahead and bring us to the live market here on the pound yen. In fact, let me delete these here. And let's bring this up here. So we zoom in. Okay, here's our 3 o'clock on the 26th. This was yesterday morning. You can see here the market would have came down, triggered our sell, And in this case here, we would have been up about, this one was up about 33 pips here. So probably, depending on how Josh's strategy would work on this one, that may have been an opportunity to trade that one. You'd be about 33 pips on that one. And I believe this is the candle from this morning. Yeah, this is the one from this morning. And we would be up on this one, 55 pips. So we've probably been right there at that 50 pip limit right there. So the last, what, 4 trades, even if we did lose this one, that would have been 50, 50, 50, so 150. So you've been on these last, what, 3 trades? Oh, sorry, last 4 trades. We won 3, which would equal 150 pips. Lost 1. We'll call that a loss, even though with Josh's strategy, it still might be a win. Oops, minus 30 pips. So our net, just over those last 3 trades, would be 120 pips. So not too bad, 120 pips with a mini. That would have been, what, $120 in profits. But with standard, that would have been, what, $1,200 off of that, just off the 3 trades here. Now, once again, they're going to show you how to do this on 6 different currency pairs. And once again, I'm showing you the basics here in the video. I stress this enough. In the video here, Josh goes in much greater detail about this, showing you higher probability of which direction he believes the market's going to be going to help actually limit this and show you here. Now, once again, yes, somebody asked which currency pairs. Once again, I'll pull this up. This is on the pound Australian, pound Canadian, pound New Zealand, the pound US, pound Swiss franc, and the pound yen right there. So those of you, once again, on the daily daybreak, this London daybreak trading strategy, going after with this one right here, 50 pips per day. That's 5 times a week, so that gives you 30 opportunities per week. So the question you have to ask yourself is, do you think that you could maybe capture a couple of these each and every week? In fact, like I said in that training video, Josh will fine-tune this a little bit more. When you take our charting software for a trial here, you're going to get the details, in fact. In fact, let me go ahead and go into details about that. I'll show you here in just a second how to get this. As part of our 14-day trial, it's only going to cost you $1 here today. You get to take it for a trial for 14 days. You'll get these onboarding videos here. We'll show you here. I'll actually show you here in just a second how to set up a demo account, how to get the 3 workspaces that he's going to provide to you, those Fibonacci's. Those are the first couple lessons. We'll show you how to navigate, how to do all this as well, some auto fib tools, linking your trade, your broker's account to our trading platform, and how to use the workspaces, develop your systems, how to use systems here, and a bunch of different things here. And you'll get that video for the London daybreak trading strategy, and you're also going to get a live webinar this Friday. Either myself or one of my colleagues on Friday at 10:30 to 11:30 will be answering your questions about the charting software here. So the neat thing about this is that you'll be able to come in here, take this for a test drive for a couple days, write down any questions you might have, and on Friday you'll actually get into a live session here with one of our professional analysts here. So what I'm going to do is I've showed you here some basic analysis, showing you how the software works, showing you some of the features of the charting software here, kind of showing you here you can do the in-chart trading, that auto-fib functionality, the ABCD tools. There's actually a lot more here I didn't actually get to show you here. In fact, actually, as part of our charting platform here, not only is there that auto-fib tool, we have that auto trendline tool. For those more advanced traders, we actually have a King's Crown tool, showing you make sure you do your King's call correctly. I showed you those candlestick tools. Oh, here's another neat thing about this, my friends. Let me show you one more quick thing here before we move forward, and I'll actually send out that link to show you this here. Let's go back here to my trade I was showing you here. Here's another neat feature. Some of you say, well, do we have to be in front of our charts all the time watching the charts? I'm looking right now for the market to go above this trend line here. Remember, I'm looking for it to break above this trend line. I don't have to sit in front of my charts waiting for that, because I can come in here and I can set an alert. I can have this either send me an email or a text alert right to my phone, letting me know when the market does in fact break above there here. So I don't have to be sitting in front of my charts waiting for this to creep across that trend line. It can actually send me an alert to do that here. And we actually do have also auto trading, and I'm going to show you here how to set up a demo account right from this as well. Now, for those of you wondering, I think you might have seen my colleague here earlier. Normally, as part of our education, normally you would have to be a student of Market Traders Institute to get access to these charts. It's part of our ultimate trading package in our education here, and we would normally charge you $249 a month on a month-to-month subscription. However, for Investor Inspiration here today, we're going to do something very simple, very easy for everybody here. For those of you, you don't have to become a student. You don't have to invest in our education at this point. All you have to do is, if you want to get access to those video tutorials and our charting platform, it's only going to cost you $1 today for a 14-day trial. It's part of Investor Inspiration here today. So what I'm going to do is I'm going to send out a link to everybody here for those of you that want to take advantage of this here today, to take advantage of that charting platform for a 14-day trial for $1. See if this is for you. I'll actually show you here in just a second how to set up a demo account so you can literally get started to actually practice trading live here today. Now, the neat thing about this is that when you go beyond that 14-day trial, you can cancel at any time during the 14 days. If you choose to go beyond the 14 days, you won't be paying the $249 a month. As part of Investor Inspiration here today, we'll lock you in $59 a month on a month-to-month basis. There are no long-term commitments here. If you want to take the charting platform on that month-to-month basis, we'll lock you in at $59 a month here. Now, all I want to do is I want you to focus just on the 14-day trial here today. Take it for the 14 days. Take the charting software for a test drive. Go through those tutorial videos here. Go through the live sessions here. We also have some free some fast action bonuses here. We're actually going to include 3 workspace templates from Joshua Martinez. You'll get the workspace for that London breakout, and it'll actually show you how to download 2 other ones as well. So what I've done is I've gone ahead, I've sent out that link to everybody here in the room. I'll walk you through the process right now. Let me send that link out one more time. It's going to be in the chat box, or if you want to, you can simply just go ahead and type this into your chat box right here. I'll send that out one more time to everybody here in the room that wants to take advantage of this here. You simply click on the link. So let me walk you through the process of how to get started. I kind of call this my quick start Forex program here. Number one, today, to help get you started, you're actually going to take the charting platform. You'll use the same charts that myself and our students are using here with all those same features I just showed you here today. You'll get to take it for that 14-day trial for only $1. There's no long-term investments. It's just going to cost you $1 to get started here. So I'll walk you through the process of that here in just a second here. Actually, I'll do that right now. Let me pull that up. To activate your 14-day trial, you simply click on this here, enter all your billing information. Once again, just $1. There's no obligation. Just simply cancel within those 14 days, and it's just a $1 trial. Now, if you go beyond those 14 days, you'll get locked in with our $59 a month special. It is on a month-to-month basis. There is no long-term commitments. It's just on a month-to-month basis. But take it for the 14 days. Go through those lessons here. See if this is even for you. Now, after you get registered for that 14-day trial, you're probably going to receive 2 different emails. You're going to get one email that's going to let you know that you are in fact registered, and you'll probably get another one that's going to give you the login information to get into the back end to those tutorial videos. I'll pull those up here in just a second. So the next step is, after you register, view the training lessons. View these training lessons I showed you here. You're going to get the onboarding series here of how to go through the charts. There's I think 10 different lessons on that. All these different lessons here showing you, walking through how to use the charts. You'll even get the London Daybreak trading strategy video directly from Josh. So I kind of gave you the basics, showing you how my trading strategy is with this. He'll go into a little more detail about this here and show you how to do this. So I think it's at least worth $1 to actually hear it directly from him, get the charts, get all this here, and just like that. Now, we do have a live webinar coming up this Friday. Like I said, either myself or one of my colleagues will be going through a live session here, walking you through the process here of how to use the charts. If you have any questions between now and then, write them down. You'll be able to ask a live analyst in between now and then if you have any questions as far as using the charts between now and then. So take them for a test drive for a couple days. You'll get into a live webinar on this Friday here. Now, what I'm going to do is, let's go ahead here. That's the next step. After you go through the lessons, today you can also set up a demo account. Now, you can actually set up a demo account from our charts here. You can set up a demo chart. Oops, hold on. We can show you how to set up a demo account right from the charts. But what I would like to do, for those of you, if you want to be a little bit more advanced, if you want to go ahead and set up a demo account with a broker, the broker I use is FXCM. You come to fxcm.com, click on Practice Account, and very simply here, within a couple seconds, sign up for a demo account, and then you can come in here, and those tutorial videos will show you how to link this demo account directly to our charting platform here. Now, I'm not allowed to recommend a broker. I've used FXCM, I've used Forex.com, I've used them. You can go into each one of them. So they provide you with a demo trading account, or Oanda. Oanda is another one that's very popular here with some of our analysts here. Go on, set up your trading account, and in the tutorial videos, these tutorial videos here that Josh is going to provide you here, let me see here. I think it's one of these lessons over here. Hold on one second. Yeah, there we go. There's a video here showing you how to link your brokerage account right to our charting platform so you can actually trade right from the charts. So what you'll do then is the next step is that live training class coming up on Friday, answering questions you might have, take some notes as you're going along. Basically take the charting platform, take this for a trial for 14 days. Those of you then looking to become students, but maybe you don't want to go through the full education, but you do love the charting platform, take it for a test drive for $1. You're only risking $1 at this point. You'll get everything I showed you here today. You'll get all this here, all these indicators, everything I just showed you. You'll be able to draw the trend lines, the auto fib tools. Somebody just asked here about trading stocks. Yeah, we do have, you can trade stocks from the charting platform here if you wanted to. You can come in here if you open up a chart. Unfortunately, though, as part of the trial, you won't be getting the stock feed. You'll be getting the Forex feed. But what I can do is I'll show you here our customer service number here in just a second. If you're interested in trying to set up a stock feed, becoming a subscription to this, you can give us a phone call, send us an email. We might be able to help you out as far as setting up a stock feed for this as well. But basically, take it for the 14-day trial here. You have nothing to risk except for the $1. If you're unhappy within those 14 days, either give us a phone call, or if you have any questions, I'll pull this up here in just a second with our 800 number, or send us an email. You'll get all the details. In fact, actually, let me pull that up as well. All the details here about the cancellation policy are right here. Everything's right here on that link I sent. Let me send out that link one more time. A couple of you have been asking about that link. I'll send that out one more time. Yeah, the first step is clicking on the link. It's going to bring you to this page. Activate your 14-day trial here, fill out your information, and once again, you'll be getting probably one email letting you know that you are in fact registered. You'll get another email that's going to give you access to log in to this back-end portal here. Now, another way of canceling the charting subscription, right here on the back-end portal, cancel my ultimate charting subscription right there. So as long as you cancel within the 14 days, all you're going to be charged is that $1. Once if you go beyond the 14 days, we can get you locked in, saving you off of the typical retail price of what we charge on this here. Now, what I'm going to do is before we end the webinar here is I'm going to go ahead and pull up our 800 number, and here's our customer service number. So if you have any questions here, if you have any questions, here's our 800 number. Here's our customer service number. If there's any questions that I'm not going to be able to answer here for you right now, simply give us a phone call, send us an email. We can walk you through, and we have our people standing by here. So that's our special for today, my friends. It's a $1 trial here for 14 days. You're not going to have to become a student. A couple people already asked that in the meantime here. Yeah, you don't have to sign up for the Ultimate Traders package for this. This is simply, you go to that link. I'll pull that just a second one more time. Register for this for only $1. It's going to cost you $1 here to get the charting platform. You'll download the actual charting platform, take it for a 14-day trial here. And if you choose to go beyond those 14 days, you won't be paying the $249 that typically our students pay. You'll only be paying the $49 a month on a month-to-month subscription. So you just asked about that again. Yeah, it is only on a month-to-month subscription. So there are no long-term commitments. Simply take it for the 14-day trial, see if this is even for you. If it is, get locked in at the $59 a month. You don't have to be a student. You don't have to go through our education. Now, for those of you that are interested in education, we do provide a full education. We can answer any questions about that as well. As part of this as well, you're going to get 3 templates. I'll pull that up here in just a second, showing you how you can download those templates as well. So one last time before I bring this to a close, I think I've gone over my time. Yeah, I've gone over my time here. But what I'm going to do is let's go ahead and send that link out one more time. If anybody has any questions here, I'm going to stick around here for about another minute. I'll walk you through the process of getting registered. But the first step, once again, I just sent that link out to everybody here in the room. It'll take you to this page. This will be the page that you'll bring you to. You activate your 14-day trial. Once again, you'll receive an email letting you know that you've been activated, and also you'll get another email letting you know that with your login information here. If you have any other questions here, you have a couple links down here that can answer any questions as well. But once again, yeah, you're taking everything I showed you here today for a 14-day trial. Somebody just asked about the charting platform. Yeah, you're literally going to be downloading the trial here, the actual charting platform here. So you'll actually physically get the charting platform on your computer. You'll be able to download 3 workspaces from Joshua as well. So we'll get you started. I think one of them is that London Daybreak, workspace, and you'll also get, I think, 2 other ones as well. So you actually get the charting platform, download it, take it for a $1 test drive here. Now, Lee just asked a good question here. Lee says, is charting tied to anything like a Thinkorswim or Read Station? Lee, you can tie this charting platform to whatever you would like to use here. Here's the neat thing about this is that you can go in here. Let me pull this up. Yeah, the feed is independent. The feed is independent regardless of who your broker is here. So let's go ahead and here. You come in here. The videos will explain this as well. You come in here and so, oops. Hold on one second here. Whoever your broker is, you simply come in here. You can add your broker. If you set up a demo, once again, the videos will go in a little bit more detail here, explaining how this all works, how to set this up here. I'm kind of giving you the basics. These videos that Josh is going to provide you with. He'll walk you through the process here of setting up the demo accounts, setting up everything as you're going through. You'll get that London Daybreak video. You'll get that live session coming up on Friday. All this is included for the dollar, my friends. Yeah, some of you are asking even the charting. Yeah, the charting is included. You'll get this, trade this for a 14-day test drive. You'll get to use like the auto Fibonacci tool. Everything I'm showing you here today is part of this here. The auto trendline tool, all these auto tools are built in. These auto candlestick tools are built in as well. So everything I demonstrate and show you here, you can play around with this as well. So on that note, I'm gonna go ahead and send that link out one more time. If anybody has any more questions here, Peter's asking here, are those the templates? Peter, I know the one template. I'm 99% sure the one template is going to be the London Daybreak strategy template. I'm not quite sure what the other ones are, but you'll go in, you can see what the other templates are, and you'll be able to download them as well. Let me see if I can answer a couple other questions here. Yeah, the other auto Fibonacci tool. Let me pull that up one more time. Yeah, the auto Fibonacci tool, it's built into our charting platform. It's patent pending. I believe we're the only ones that have it. We have the smart trendline tool. Yeah, we also have smart support and resistance tools. As part of education, we go into a little more detail explaining all this as well. Some other neat things that are built into our charting platform. Those of you that are students, you can access Analyst on Demand from here. The market scanner, you can access it as well right from the charts as well. So yeah, the other thing is, I think Josh will show you how to set these alerts up as well. So you can set up alerts as you're doing this, to try to do that as well. And the workspaces, yeah, for those of you who wonder how you import the workspaces, you simply come in here, open from your computer, or I believe actually here we have the open export workspaces. I think you might be able to simply come in here. Hold on one second. There we go. Let me see if they're right here. Okay, so it wouldn't be there. It's oops. Sorry about that. I think you'll come to Services, Downloads, and Trading Systems. Let's see here. Yeah, I'm not quite sure. I wish I could pull those up for you. I'm not exactly sure. These are all the ones I get access to, my friends. Unfortunately, I don't know. Let me see if I can quickly find here. Oh, there it is. No, that's not it. But anyway, it'll show you in the videos where to actually come in here and download the templates and everything just like that. So on that note, my friends, I'm going to send out that link one last time. I'll stick around here for one more minute. If anybody has any other questions here on that note, I thank Investor Inspiration for allowing us to come here, demonstrate this here. Yeah, once again, these are the actual charts. In fact, I showed you here that trade I just placed the other day using these charts, using the candlesticks, the education I derived here from Market Traders Institute. I'm actually putting this in your hands here today. I kind of call this my Forex starter kit. You'll get the charting, you'll get these videos. So literally tonight at actually tomorrow morning at 3 o'clock, you'll know exactly how to actually go through and actually do the London Daybreak here. And you actually can set up a demo account. There's your practice training account right there. Actually, here's what we do. One more thing before we leave here. I'm more active on Instagram, but what I'm going to do is I'm going to send this out here. This is actually my Facebook page. This is my Facebook page where I do provide, I'll actually send this out to everybody as well if you want to connect with me on Facebook. There's my Facebook page. I send that out as well. You can come in here. I provide market information here as well. Later on today, I'll actually post a link to my Instagram page. Every day on Instagram, usually I'm sending out trade alerts or trade ideas of what I'm looking at in the market. So I'll kind of help you out get started with that as well. So on that note, my friends, let me pull this up one last time. Thank you, Investor Inspiration. Thank you for allowing us to get started here today on that note. I wish you the best in your trading. I can't wait to see how those of you are moving forward here today. So on that note, I'm going to stick around for one more minute. If you're having trouble with that link or registering, please let me know. I'll help you get started with that as well. So on that note, thank you, everybody. And on that note, I'm going over my time, so thank you, and I wish you the best in your trading career.